Gina, welcome to FundForum International. Thanks so much for joining us.
Pleasure to be here.
Now, the buzzword this year seems to be FinTech.
Yes.
What does that mean in 2016?
I think it's totally meaningless, especially to consumers. And to our world of investment, it tends to mean robo-advice, and I have a real problem with that terminology. But not only is it very unfriendly, it's totally meaningless, because the robo part of it, there are no truly robo-driven solutions at this moment in time. And if you look at the advisor bit, advice is much wider than just investments, and most of the offerings out there are actually online or technology-enabled investment solutions.
So you think technology is something that should be seen as an element throughout the value chain, if you like, and not just a buzzword to use?
No, it's not a replacer, it's an enabler, and it will enable better outcomes for clients because it will allow greater transparency, lower cost, disintermediation, and it will allow people to see exactly what they're buying when they've actually bought the product through transparency of holdings. So in all, it should be better for outcomes, but it depends, of course, what the inputs are to get the outputs.
I think you spoke about the fact that realistically it's the big incumbents that need to be embracing this and using this because they're the ones that can afford to. Explain that for me.
Yes, well, if you look at the market, the cost of entry, it's not just the technology itself, because, as I said, it tends to be a hybrid. It's humans as well as robots. So the cost of the employees, if you look at a business model that's sustainable, it's significant. You're looking at overheads of millions and millions a year. So it's much easier for the incumbents, who then not just have the back office and compliance and the deep pockets, but they also have brand awareness, because that's also a very big challenge for new entrants.
So if those big companies are doing this, who is their customer and what do they need to offer?
Well, I think they need to remember that it is this enabler. So it's about the value of the service, the type of service, the trust they're engendering, and the outcomes, the consistency. Because at the moment, somehow we're using technology to mask the problem, which is that a lot of the products in the marketplace are not fit for purpose and are too high fee and too irregular in the positive returns that they're delivering for clients. So we need to be looking at better products and seeing technology as a distribution channel that enables better delivery.
You talked there about too high fee. Is that because we have a more demanding customer now who expects more for less?
No, it's because of transparency. It's because of regulation that's going to come in. And for the first time ever, the customer is going to, when 3 different directives align in sort of 18 to 20 months' time, for the first time they're actually going to see exactly what they've been paying and exactly what they're holding, and they will not be happy. So those levels of transparency are going to create a real sense of distrust that has got to be addressed by the industry.
And you think technology is a good way of doing that?
I think technology can create transparency, but it's not the only thing, because we've been running our online platform now for 2 years, and I can tell you trust is still the number one trigger why people buy us, is because of trust. But behind that, they still want the personal touch, they still want to be spoken to on the phone. So it's not just simply one or the other.
You would describe it as a hybrid, I think.
It is absolutely a hybrid. And if you look at other sectors, you look, everybody else in any other sector you look at has embraced technology. We've been really slow at doing it. So we just need to get on, embrace it, and take it on and accept that technology will not give us all the answers we're looking for, and will not repair the damage that we've done to our industry over the past in terms of not delivering best outcomes for clients.
Judging by the conversations you've had here at FundForum, do you think there are people who are singing from the same song sheet as you, or do you think there are still people who are very resistant?
No, I think the people I speak to sort of make me want to pull my hair out for 3 reasons. One is that they see FinTech as somehow it's this messiah moment that's going to solve all the issues and everyone needs to jump on the bandwagon without actually looking at the fundamentals. So, that it's the FinTech bubble growing again, in my view. The second thing is that they misunderstand the regulation around FinTech, because FinTech, it does not, there is a regulatory issue here when it comes to a fiduciary duty and who is liable if a product has been deemed to be missold. Is it the person who's designed the back office portfolio? Is it the company who designed the algorithms? Or is it the human person who's then added on that element of advice? So there's a massive liability issue here that the regulator is looking at, and we can see from the US, in the state of Massachusetts and through the Department of Labor, that they're very, very concerned about robo-advice and that fiduciary duty. And thirdly, I think they're looking at technology as being the front end rather than using it as a data source and creating more efficiency than back office. I mean, the back office and data provision of technology is what will really transform the businesses.
What do you hope people listening to your panels and debates here and the conversations you've had with people, what do you hope people will take away from you from this conference?
I think there's an opportunity to use technology to be far more efficient, but what I'd like to take them to take away is to think about advice in its much wider form, because there is an advice gap. And what we're finding is that lots of people who come to invest with us are pretty confident investors. If it's someone that's more a novice investor or not so confident, especially through our female brand, moneyshe.com, is that they need advice, they need to go to an advisor. So if you need to go to an advisor, then maybe the opportunity is for advisors to look to use technology to template, for example, to take out some of the grunt work of onboarding clients, to do the KYCs, to know your clients. And then they can take that form that they generate and then sit with the advisors. So by taking out some of the grunt work, as I call it, you can become more efficient in delivering lower cost advice, because advice is still necessary.
And it's a more efficient offering potentially for a customer.
Very much,
and
it's actually what the law, if you look at the legal profession, it's really interesting that the Law Society have actually rubber stamped, if you like, a format for a will. So if you go to lots of law firms now, you can actually fill out all your details and it generates a form that then you take and is sanctioned by a lawyer. And that can take an hour rather than sitting and generating fees that would have taken maybe 3 or 4 visits. So that's the sort of templating that we need to look at across the sector.
Thanks so much for joining us. It's been fascinating to talk to you, and I think
You're very welcome.
the panels you've sat in on, I've all enjoyed it very much too, so thank you.
You're very welcome.